Hello guys, welcome to M Trading's webinar. So today what we're going to cover is do some market analysis based on fundamentals and technicals. We're going to talk about what's taken place from the weekend and the last couple of days in the financial markets and what we could expect for this week. Let me just introduce myself. My name is Gavin. I'm a trader based in London, based in central London on a trading floor. We have live traders, we have students, all looking to learn to trade. And yeah, so I'm trading with some of the best in the city, and London was this week voted the best financial best place to trade financially. Yep, so best financial markets in the world. Yep. Okay, so let's give you a rundown of what's taken place. So some of you already know we do have over the weekend a second Hurricane Irma, which hit Florida, Miami, those areas. So specifically, they were expecting a Category 4 hurricane, which was going to cause some significant devastation, significant damage into that area. But when it actually did go on to hit Miami, it was actually not a Category 4 but a Category 1. So the initial expectations and what was already discounted into price, the effect that would have taken, it was much greater than what was expected and what actually took place. So from going down from a Category 4 going down to a Category 1, already Wall Street priced in a 800 billion loss in this devastation. That has been moved down, that's been pushed down to a 400 billion loss. So it was not as extreme as what was once thought. So that automatically had a push to more of a risk-on asset. So more to risk-on assets. In addition to that, North Korea. So North Korea usually sends a threat or a nuclear missile or fires a nuclear missile over the weekend. It did not do that. So there was no threats, no missiles fired into the sea. So it was seen as more positive also from that end. So the original US and North Korea tensions has been calmed down. It has been more of a calming effect. Therefore, again, moving on to a more risk-on asset, risk-on scenario. So what does that mean? So what originally thought was a risk-off theme, so a global macro risk-on theme, which is all assets that were in riskier products will be moved to more safe havens, such as gold, the greenbacks, such as the dollar or the yen, and so on. That has now switched places, so it's gone the other way around now. Therefore, we're seeing safe haven products decreasing in value and more riskier assets doing well. So the stock market's doing really well, along with the dollar. The US dollar was doing really well. The yen did poorly because the yen was the one that went to that everyone went to due to that risk-off scenario, rather than the dollar, purely because the impact was with North Korea and the US. So we've seen the yen come down in value and the dollar index, the dollar overall, strengthen. And that is what we're seeing here on the chart now currently, guys. So if I just move this slightly to the right-hand side, so the key level, so the key point I want to mention is that this is that impulsive move that we're seeing here. So this is the recovery and the move to the risk-on product. So dollar has gained in value and the yen has lost value. Another key point to mention is, where are we right now, guys? We have broken through a significant barrier, being that 110 level. So 110 was an extremely important price level, and we are testing that currently. So the bigger picture is that if we continue to see more of a drive and more of a bullish tone take place, yes, we can expect dollar index to stay above the 110 and potentially test a higher level. So let's go into a bit more analysis. So let me just clear the screen and let's zoom out a little bit. So I want to see the bigger picture. So the overview is, okay, it's been a significant downtrend. Yep. So if I just go to now a daily time frame, let's zoom in and view the bigger picture. So I'm looking for key levels here. I'm looking for trends. I'm looking for prices making new highs, new lows, and so on. So the first thing I want to do is add my support level. So that is a significant support level. You can see most recent lows as well as that previous low here. What is the next key level? It's this level here. So 114.38 is the next key level. We've seen this drive of dollar strength pushing through. Will it go into break this previous high? Will it go into break this previous high? That is the next key point there. So going down to a 4-hour time frame, what we're looking for is a series of lower lows and lower highs. Yep. So being at this top here, that's the top there. Significant sell-off, a small pullback, hitting another level here. So this was be another seen as a resistance level. Also have a look at this formation, guys. What are we seeing here? We're potentially seeing a head and shoulders pattern here. Head and shoulders pattern that led into a reversal. So we see this reversal taking place again, move down to that lower price, retracement, another lower low, retracement, lower low, lower high, all the way through up to this point here. This is where we potentially see some convergence taking place, some significant resistance level. We've got 1, 2, 3 significant touches at this point here. So that is also a very key point there. So then from this point onwards, we have moved down to this low, being tested at that lowest point there, which is through the 110 level. Rejected that level, and the buyers at this point, what were they doing? They were not only able to pull back the market, so retrace the market. So we're seeing areas where the sellers were taking profits, but also the buyers were pushing back significantly, where it came back to retest this previous high, retest that previous high. But at this point, sellers again drive the market down, testing these lows again. So it's testing this range here. So price action stayed at this point here. It stayed at this point, stayed in this range between the 109.80 level down to the 108.85 level. So there's a range formation taking place there, and then we have some volatility involved. So this is where you see a bit of volatility. We have to move through this level, rejects this low, and then back above that range, gets rejected lower, so it's lower than the previous lower highs. So again, a continuation of this downtrend. So another continuation of this downtrend, and now we've seen that significant sell-off, strong rejection here. What type of candlestick is this, guys? This is a strong reversal candlestick there. There's a doji taking place at the low there, which has led to an impulsive move higher. Yep. So that is the key point there. You could even potentially place a trend line if you want a trend line break through this level here. So we're looking for a trend line break through this level for that potential reversal. Yep. The next key point is, let's see if we go on to really significantly close above the 110, because we can see currently the price action is just above the 110, 110.06. So it's only 6 pips above that 110 level. I need a bit more price action movement above that level. So dollar yen, guys, dollar yen is the asset to look into, especially now we're seeing a more risk on scenario. Okay, let's move on from there. Let's clear some of these assets over here. Okay, so what do I want to move on to next? Okay, the next important data. So I've spoken about the weekend and what's taking place with the hurricane, along with North Korea tensions dying down a little bit there. And in addition to that, today we had an important indication for sterling, so the UK economy, which was CPI year over year. So CPI came out higher. It came out a lot more positive. So looking at this website here, which gives me my economic calendar for the week, I can see that sterling CPI year over year, the forecast was at 2.8%, the actual was 2.9%. So extremely positive. What does this mean? Inflation. There's a lot more inflation. Ideally, the best area to keep inflation is around 2 to 2.2. So all governments and the central banks want to keep inflation low, but the correct percentage is around the 2% mark. So we're way above that 2% mark. We're almost hitting that 3% level. Does that mean now that the Bank of England will go on to hike interest rates to lower the inflation? There is a possibility. Yep. Again, use these websites, guys, to build your fundamental knowledge. Yep. So you can see over here, this is measuring the change in price of goods and services purchased by consumers. In addition to that, have a look at this. Consumers' price account for a majority of overall inflation. And inflation is an important currency valuation because rising prices leads the central bank to raise interest rates out of respect for their inflation containment mandate. So that is an important indication there, guys. So let's move this out of the way. Right, so the asset I want to look at is specifically cable. So what's happening in cable? So naturally, when there is strong inflation, there is that strong consumer prices and spending is taking place, we're going to see sterling do really well. So even though we've seen the US dollar drive up and go from a extreme weakness and go into a risk-on scenario for the dollar, we're still seeing that the strongest currency at the moment is sterling. So sterling is that strongest currency at the moment. So let me just move this to the right-hand side. Okay, so today we went on to break through the 132 level, guys. That is an extremely strong confirmation of extreme bullishness. So to add to that, so not only do we know about UK inflation being extremely positive, another key factor will be this Thursday. So this Thursday, the Bank of England and the head of that bank is Mark Carney. Do follow him on Twitter, guys. He will be letting us know what is their latest mandate, what is their views. Are they hawkish or dovish? What are they likely to do? Are they going to increase interest rates, or what are they going to do? So far up to now, they have not increased interest rates, and that is because they want to be a bit more accommodative due to Brexit. So there's Brexit negotiations taking place, and in addition to that, what's taking place today? So in the UK, the EU withdrawal bill, passed the repeal bill by 326 votes to 290, with all Conservatives supporting the PM, with a small number of Labour dissenting and supporting the bill. So in other words, it's extremely bullish for Brexit negotiations to take place, and they have set a date later on in the month for these negotiations. So it's looking very bullish that there is going to be some strong, tough negotiations taking place very shortly in favour for potentially a more harder line Brexit. Yep. Okay, so due to that, so we've seen sterling break out. Let's have a look at the technicals. So that's the fundamentals, guys. So let's have a look at the technicals. So key point I'd say is we've been seeing strength all the way through. So there has been strength all the way through in this direction and then that direction. So you can see that there would have been a trend line below these lows in this range here. And then you had that increase in momentum taking place in that direction there. Yep. So the top end, look at this, high, high, low. Equal high potentially, not really a significant move there, not really such a significant move higher. So I wouldn't really call that a higher high, but that did pull back. So you can almost say this is an ascending triangle formation taking place there. We had the breakout. The breakout starts at this point here. So the breach is this level. The breach is through this level, but the buying pressure starts here. So that is when all the big traders, the big traders, the institutions, look to buy at a cheaper price, and that drove the market through this level, and continued in this direction, hitting almost the 132 level, or just in that range, just above that range there. So that's the next key point there. So we start to see some consolidation taking place. Consolidation took place, and that held this level. So again, sellers in this area, and potentially even buyers profiting in this area, bullish traders taking some profits at this area. So market, the sellers push down to this low, okay, from there buyers push it back up to this high, Again, a retest of the previous high, but didn't go into breakthrough. Again, sellers come down, bit more, a stronger push there. So it gets down to this low. And that, again, led to more bullish and more buyers coming into this market. So more bullish tone there. And that went straight through this level, breaking through 132 barrier with no difficulty at all. So I will be, if you're looking at currency strengths, you're looking at what is the strongest currency down to the weakest currency. I would say the sterling, so sterling, GBP, will be seen as the strongest currency, and then you have in the middle, you would have dollar and euro, and then the weakest currency is the yen. Yep. So yes, you can see with price action hitting this new high there, a retracement's taken place, and now potentially on the upside, we're looking for another breakthrough there. Yep. So again, look to be buying, guys. Look to be buying. Okay, let's move on from there. So we've covered UK news along with cable. Another asset to look into, guys, is oil. So let's go into oil. So let me just bring up a chart of Brent. So let's have a look at where is Brent. There we go. Okay, what's taking place with Brent? So we saw Brent, if I just move slightly to a higher time frame, and let me zoom out. Key point that I want to mention is that, okay, let's take in this trend line. I'm going to draw a trend line from these highs. We can even incorporate those highs if we need to. We're seeing that is a trend line there. Yep. So that is a trend line. So 1, 2, 3 touches, false breakout also, and the market ranges. It tries to break through, and it does break through, but it couldn't follow. The momentum never came through. So the momentum never pushed through that trend line with a significant amount of volume. Market goes sideways at this point. And now we see that first bullish move that takes place. Why did that happen? It leads back down to fundamentals. So OPEC members have got together, and they're currently speaking about what is their output going to be. So what is their output going to be? And yes, they have decided potentially of an output freeze, which has already taken place, and they kept it for 6 months. That could be extended for a further 3 months, which is what is driving this market to continue higher now, which is where we're almost breaking the 55 barrier. Yep, so we're almost breaking that 55 barrier level. Another key indication to add to this is they may reduce production purely because they are not looking to supply North Korea with oil. So there has been a recent statement from the UN where the US has taken charge and put in a bill to stop North Korea from gaining more supplies of oil. So be aware of that, guys. That is also taking place. Okay. And yeah, finally, let me just go into the technicals for this. So yes, we have this trend line in place, so we're seeing short, that's the low. Again, another selling pressure that comes in earlier, doesn't go back to that previous high, that pushes the market even further down. So we're seeing lower lows, lower highs, lower lows, again, another lower high, and that is our lower low. So it gets down to almost the 44 barrier. We've seen previously, if you look at previous price action, this 44 barrier is extremely important. At this point here, we had a lot of buyers come back in. Push the market higher, and that's continued. So we're seeing higher highs and higher lows at this point. So that's the next higher high, but you can almost see that this is potentially a range, even a potential ascending triangle pattern formation taking place here. So we had an impulsive breakout, came back, retested, couldn't break above, more selling pressure. But we're seeing buyers on both sides, both directions. So there is a balance between the buyers and sellers almost in this price action pattern, but then we do lead to that initial breakout which came back, retested this area. So retest this area. I'll be looking for a break through this level now. So a break and a close above this range from a significant candle. That will be key, guys. The target would potentially be in this range here. So I'll be looking for a target in that range there. So back up to that 57 level. Yep. So we're looking for a target of 57 for Brent oil. Okay, let's move on from there now. So In addition to this, what else has taken place? So you might have read in the most recent news articles that S&P 500. So if I just hide some of, okay, let's go in there. So the S&P 500 went on to yesterday to make it's the fourth time it's made a new high with a 1% move in a single day. So it's made a significant move from yesterday, which has only continued today. So we're now looking like at the indices overall, so that is S&P 500, Dow Jones, as potentially even NASDAQ. I think NASDAQ actually made a new high prior to this. Yep, so you can see NASDAQ, the tech sector has been doing very well. So NASDAQ has been the one that's leading and pushing the market higher. And then you have the S&P 500. The Dow Jones is slightly lagging. So it is slightly lagging. It hasn't gone on to make a new high as of yet. But it would catch up with the other indices because they are heavily correlated with each other. So my short-term view with the US indices is bullish. Yep, so I'll be looking for a buy position. Just looking at the bigger picture, guys, if I go to the daily time frame, where are we? This is where we are. So overview is, okay, we had some sideways correction here, a lot of volatility. That's taken place. Yeah, that's fine. But in addition to that, the most recent trend, that could be seen as a correction. Yep, so that is a very short-term correction taking place. Yep. And then at the same time, we're now seeing a continuation in this move. Yep. You can even place a trend line from these lows in this direction, something similar to this. That is your potential trend line there. Yep. Okay, so let me add something that you might not know about. So what's come out recently is from across the pond in China. So from China, we have seen that their most recent statistic in regards to their growth has been doing really well. So it is better than expected. So originally their growth was seen between the low 6%, high 5% level. We're seeing it towards the higher end of that 6% level. So we're seeing it in the range of 6.6 to 6.9 range. So that's showing us that there is a lot more growth in the overall global economy. Yep, which is also a very positive factor for the US. Okay, so we're seeing that, yeah, indices, you should be looking for a potential long position. Yep, and finally, so the final asset that I want to cover, guys, and this is in regards to an individual company within the S&P 500 and the NASDAQ, which is Apple. So, I'm not sure if you've heard most recently, but yes, Apple today will be launching 3 new phones. So they're launching their 3 new phones. They are currently setting up their conference right now, which is taking place. You could always watch the live conference. There are many online sources, but the overview is, okay, if I just go to what I want to do is have a look at what's been taking place in Apple currently. So what is taking place in Apple? This is what's been taking place. So the overview is, let me just go to the daily time frame, is this. So we've been seeing Apple all the way through show extreme bullishness all the way through. Yep. But there is a well-known quote that goes in the market, which is, buy the rumor, sell the fact. And that is the perfect scenario for Apple. So what generally tends to happen is a lot of traders will already place their trades and know that while they anticipate will release a phone with new technology which we haven't seen before, and the market will be extremely positive about it, and it will be well built, along with their sales will increase and so and so. Yep. So what they'll do, they'll start buying earlier, not only a couple of days earlier, but potentially even a couple of months earlier. So that is what drives the market in the first place. And when the release, on the day of the release is where you'd actually see a sell-off taking place. So leading up to that release date, the conference taking place a couple of days before, for potentially a couple of weeks afterwards, you'll start to see a lot of traders taking profits at those highs. So you'll see more of a correction taking place at after the conference. That generally has happened previously. So it has happened previously with Apple, hence why I'm stating this to you guys now. So that could be a perfect scenario for you guys, and not right now, but in the coming days or weeks, you could look to add in or buy at the lows, buy at these dips. So that is what the aim should be. So looking at a shorter time frame, you can see getting from these highs up here. So in the 1 hour time frame, looking at these highs, we're seeing some sell-off taking place already. So potentially people already taking profits here. It's gone on and it's around the 161.30 level. So be aware of that, guys. There could be some chart pattern formation where you could see potentially a shoulder, head, shoulder formation and a correction taking place, and then the next drive higher. Yep. So be aware of that, guys. That is being taken place currently. Okay, guys, I've covered some of the top assets to go through. These are the assets I would be looking at for the rest of the week, and you should too, guys. We've gone over dollar, the dollar index and dollar overall. We've gone over the yen. We've talked about risk on, risk off, North Korea, Hurricane Irma, along with sanctions with North Korea. We're looking at OPEC members and their meetings, what's taken place, and we've talked about Brexit along with UK inflation, and we've looked at the indices, the US indices, how they are driving markets higher. So they're extremely now bullish as they're breaking their previous highs and all-time highs also. And now we also have the conference from Apple, which could also be a deciding factor whether there's a short-term dip within the tech sector itself, as Apple is the largest market cap in the NASDAQ along with the S&P 500. Okay, guys, this is Gavin Pannu. Thank you for listening to this webinar. This was hosted by myself and Nick, who is replying back to your messages. Thank you for listening to M Trading's webinar. Take care, guys. Bye-bye.